And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, the show where we put you in front of where the action is in the broader markets so that you can take advantage of that momentum and the activity taking place in the markets. Very developmental, if you will, this week, certainly from my work. For those of you not familiar, my background is for 15 years with William O'Neill and Company, founder of IBD, founder of a system that is proven to help get investors in front of these big, fast moving stocks just before they take off. We're talking triple digit plus growers. So that is my approach to the markets. So a lot of action relative to that this week. So let's not waste a minute. The agenda, of course, as always, we are going to go ahead and take a look at the markets. Where are we currently? The S&P, of course, has hit a new high in price. Always nice to hear that kind of a bullish backdrop. Also, we will go ahead and drill down further beyond the current markets and uncover where that strength is. A few companies that reported earnings this week really told a story, and maybe more importantly, they confirmed an existing story as it relates to outperformance, where the growth is during this historical pandemic. Also, add-on plays to those strong earnings. So we're going to talk about some economic reports, companies that came out with strong earnings, and then how you can play not only those moves, but other industry groups and stocks that are benefiting from that growth. Also, we are going to take a look at some stocks that are due to report earnings next week. That's relevant because there are still some high-profile stocks that may continue to confirm this story that has been unfolding. Let's take a look too now at some economic reports and just general news that took place this week to help provide a framework, a strong backdrop. The Federal Reserve did come out earlier in the week, and they were very, actually midweek as well, adamant, and they're thinking that the road to an economic recovery is going to be quite bumpy, and that really got people not happy earlier in the week. We did see a bit of volatility. And then also later in the week, unemployment on Thursday, those weekly claims, they did top 1 million. That seems to be the mark. The prior week, last week, it got down to 900,000. We did get back up to that million mark. So that did cause a bit of bumpiness as well. Congress still at an impasse on that stimulus package. They are on recess, and there's no sign of them being drawn back in because there is still quite a divide. So these three items point to a bit of a stalling, certainly not very constructive for the markets. But let's carry on, because technology stocks did continue to firm up. Top performer for the week, up 3.5%, well ahead of the S&P. And then also we did see U.S. housing starts surged, and also existing home sales, a 13-year high. So this kind of activity where we are getting generally bullish economic news is being surrounded by some bumpiness, but net market hitting a new high. I will tell you, investor sentiment is bullish. The ability to override the Fed's comments, some increased unemployment, and no sign of a stimulus package really does bode well over the near term. So let's go ahead, drill right down. Now, of course, I am using StockCharts.com, and I'm going to just dive right in. I apologize for not having this entirely set up, but what I want to do from here is go ahead and share with you a view of the S&P 500, just to give you a clear-cut sense of where we are with the broader markets. And of course, we can then carry that forward with other indices, other areas. So here we are with a look at the large cap S&P 500. This is a daily, and as mentioned, the S&P did in fact touch to an all-time new high in price. Your uptrend is firmly in place. The index is above this upward trending 10-day simple moving average, your RSI, and your stochastics in positive territory. So good to note that we do have a backdrop that would tell you it is safe to put your money to work. So from here, let's go ahead. Let's take a look. We want to know where can you fish for these outperformers? Where are the existing outperformers that you can add on to despite their rallies to date? We are looking now at the underlying S&P sectors, those 11 sectors. I've gone ahead and added an RSI, sorted it in descending order. I'm going to go ahead and update it. This is a 2-month daily price chart. Quite simply, strength up here in the upper left quartile, lower right is the weaker areas among the S&P sectors. So we can see consumer discretionary. This is an area that has really just been on a tear. Take a look. Hitting new highs, consumers still opening their purses. This is one of those areas as we get into these earnings. I'm really going to pull the curtain back, share with you precise areas among consumer discretionary that are in fact propelling this particular sector to new highs. I think these themes will make quite a bit of sense to you, but they are worth noting. Technology, just a beautiful thing. This is and has been a real leadership group. Coming out of this bear market period, I had pointed to the concept that technology during this lockdown historical pandemic had turned into what one might call a staple, consumer or otherwise, but a staple because of the need for the technologies being offered, software, semiconductors, and so on, that were helping to keep the quarantined individuals connected, whether it was via work, school, and so on. So technology continues to be a leadership area. We're going to cover a couple of stocks there that did report this week and highlight some of the better stocks that appear poised to more outperform the broader markets. XLC is internet. Of course, this again is all about keeping people connected, but there is a media entertainment component, but equally strong. So those three have been your real strong, I like to call them the three horsemen, if you will, as far as leading these markets, NASDAQ hitting a new high as well. So let's drill down. We can see some of these other areas. Industrials began to come into play. I call this the recovery rally, with this idea that a vaccine is in place. Economic backdrop looks very constructive, but we did see a pause. I think that stimulus package, the idea that we may not see that anytime soon, and then other factors are causing these. Also, take a look. This is a pretty big run up here over a 1.5 week period. So any kind of pullback would certainly be not out of line at all. So let's go ahead and take a look, of course, down here in the weaker area. Energy, utilities, real estate continuing to suffer, and financials, another area that had a pretty big run relative to its industry group status. And it is pulling back. Now, from my work, I do not like that it is pulling back with this RSI turning negative. We did identify with my MEM Edge report a couple of very high quality bank stocks that had already broken back above this downward trending 200-day, poised for great growth, but as usual, they very well will most likely perform in line with the industry grouping. So this is that kind of when you're looking for turnarounds and they go up to this 200-day, this blue simple moving average, and are denied. This is going to be a real firm line in the sand, so to speak. So from my work, I pay close attention to those stocks that have already broken up above this resistance. And then two, they also have those growth characteristics that are critical in helping to propel them even higher. Now let's go ahead and take a look outside of those sectors, because we want to know what other industry groups, how can we narrow this down even further? So again, a 2-month daily price view. I've gone ahead and added some relevant ETFs. We talked about consumer, tech, and communications. So again, strength to weakness. And you may be surprised to see up here in the forefront, this is the Dow Jones Transportation Index, but in line with those industrials, we have seen a bit of a pause here. However, there is relative outperformance. Some of these truckers, transportation, FedEx and so forth, still holding up really remarkably well, looking interesting. XRT is an equal weighted retail ETF for the S&P, but there is one other component. These are primarily online sales providers. So you'll see a lot of names that you may be familiar with, and digital sales is driving them higher. Etsy is one, Chewy dog food online only, Etsy is online only. So they are in that IRT. So this is that area of retail that I mentioned to you as far as where the relative outperformance is. I buy another retailer, but let's go ahead down here and take a look at a group. Those of you that follow my work and also watch this show weekly, you'll know that we have been all over technology software. This is IGV, a prominent ETF within that group, and software was one of the first out of the gate. This was all about cloud computing, keeping people connected, but we did waffle a bit here. We've kind of stumbled after hitting a new high in mid-July. Again, not entirely out of line given the super big advance. A lot of this here was during that recovery period, moved back into industrials and some of these cyclical areas that do well in a recovery phase. But this shakeout here, this was a 6% pullback about 2 weeks ago, and it really was rather unnerving because a lot of these big leadership software stocks did pull back as well. But pleased to announce that there has been a downtrend reversal. So this IGF as well as Select, not all software stocks have come back. We will get into this, but some of your leadership names, certainly several from my MEM Edge list, have very decidedly moved back above shorter term moving averages and are back in their uptrends. So that's worth noting. Let's take one other area of technology, semiconductors, still in this very confirmed uptrend. A little bit of waffling here, US-China tensions pull back, but by and large, semiconductors still holding up really quite well. Biotech's pulling back just a bit here, so I did want to note that they are still underwater, so to speak. We have not experienced, we had a little bit earlier in the week a sense that there may be firming up, but not so. And a lot of this is politically driven with Trump mandating increased drug sales, which is not beneficial for this particular group. So we're going to take a brief break. When we get back, we have lots more to cover. So we will be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. I mentioned to you that concept of what I call add-on plays to a very strong group. This is a big relevant part of Bill O'Neill's philosophy, and it is one that has worked historically throughout the years. When there is a strong group, you'll see other areas that provide products to that strong group that also excel. So we're looking here at an example of a housing stock. This is DHI, DR Horton. Must be noted, they are due to report their earnings next week, but take a look at this relative outperformance. And I mentioned today, 13-year high in home sales, 22% July improvement in new home starts. And I've written about this in StockCharts.com article that this housing boom, if you will, does have legs. Lower interest rates, individuals looking to move out of cramped quarters during this quarantine period is really propelling housing quite a bit higher. So interesting, the stock is in an uptrend, could be bought on a pullback and potentially uncover areas, industries, and then stocks that provide services to this housing industry. And again, we are looking for an opportunity because housing does still look quite compelling, but you can still find other ways to take advantage of that move. So we're going to go into consumer discretionary. We are looking at an intraday. I'm going to go ahead and look at a 1 week performance quite simply over here. So here is home construction. On average, those stocks this week were up 7%. And we do have a couple of the bigger outperformers on our MEM Edge list. We're able to participate in that. But let's take this further and take a look. Home improvement retailers up 2% this week, well above the S&P 500's return of 0.7%. So here's a chart of that home improvement area. Again, whether you are purchasing a new home or because you are mandated for the most part to remain home, this has been a very vibrant area. So I'm going to sort this by StockCharts technical rating, scooter rating. Higher the number, the better. Now, Wayfair has been a real winner. First out of the gate, that high number, it's really, you can't get much higher, but we can see that the stock reported recently strong earnings. It really quite simply is emerging out of a 3-week base. So while it has been a big winner, does not mean that the upside is entirely behind it. But let's go ahead and look at other candidates that may be of interest today or going forward. So you may want to drill down a little bit further with this scooter rating, and you will see stocks that are not quite as advanced. Floor and Decor, FND is the ticker symbol, and we can see that it has had a nice move. As the name implies, they do provide flooring as well as decorations for your home. So we can see the stock hit a new high in late July, has pulled back, and it very much looks poised to break out of this nice 1-month base. RSI MACD just having that black line up through the red, bullish crossover. So that's one area. I'm going to take us back to these S&P sectors for another concept as far as the add-on play. We are going to go into industrials because there are a number of stocks here, or actually industry groupings, that would be add-ons to the housing play, and that would be construction. Just want to see, make sure that we building materials and fixtures is one, and the other one would be industrial suppliers. So let's go ahead, StockCharts technical rating, and we can drill down. BLD has been a nice significant winner, still in a very confirmed uptrend. But again, we can drill down a little bit further on that SCTR rating and perhaps get a stock that is a little bit earlier in its advance. Now, my only comment here is, for the most part, you are better served playing that already strong stock in an uptrend. It will, based on historical precedent, continue to outperform to a level that would be higher than its peers. Here is the stock. This was one on our MEM Edge list. That's my biweekly report. We picked this up earlier, and you can see that the stock, they did come out with their earnings and they broke out of this nice base upon the release of their earnings. RSI is up here, and we had that nice black line up through the red on the MACD. This particular company does provide materials for individuals for decking to improve the outdoor area of their homes. So again, this is one way that you can play that add-on, if you will. I just want to make sure I'm not this would not be the particular area, although there are a couple of strong stocks there. Let's go ahead into industrial suppliers. Again, sorting this by SCTR, and we can see site. This is again another outdoor landscaping company. It is faltering a bit here after basing upon this rally, but keep it in mind, the RSI is still constructive. The MACD is trending downward, so you would want to see a nice positive crossover. But more to the point is that concept of looking at individual themes as far as areas of strength and then adding on to that. I'm going to move on now because I do want to share with you some of the stocks that reported earnings this week. And again, this is with that concept of really highlighting and pointing out to you strength. These are companies that came out with very robust numbers and comparing them to the have-nots that did also report this week. So let's take a look. Some of these big box retailers came out with numbers this week. Target, for those of you that didn't catch this, you may not have. Huge gap up, strong numbers, up well over 10%. Big volume on that gap up. Stock very clearly poised for further upside. And Target was one of the earlier adopters of digital sales. They very, very quickly shifted and offered curbside pickup and a lot of other initiatives that have really helped the company take advantage, if you will, or actually serve those that are in lockdown. So Target, big gap up, big winner. Let's take a look at Walmart. WMT, of course, is the ticker symbol. They did also report, and the company initially gapped up on the numbers, but we can see that the company did initially gap up on numbers, but subsequent to that, they did, in fact, pull back. There was a report that came out that Amazon has actually stolen, for lack of a better word, but they did, in fact, take a lot of clients. Loyal Walmart clients did move over to Amazon. They were not as in their execution, it was not quite as skilled as Target, so you can see that pullback. So that's that concept of the haves versus the have-nots. But again, you can see that digital sales is the answer. Let's take a look at two other companies that reported. This is in the discount space. Ross came out with their numbers, ROST, and you can see the stock gapped down, huge volume. Numbers just weren't there. These guys are dependent upon store reopenings. That was a fail. And then even more importantly was inventory. They had lack of inventory and big issues. So Ross, another stock in that same space is TJX, TJ Maxx, another discounter. Take a look, another one gap down, again, all about not having that digital sales in place. So if I haven't made that point, I'm going to share two other discounters. One that is due to report next week, but they did report last quarter super strong. This is Ollie's Bargain Outlet, OLLI. Take a look. The stock is basing here. They're due to report, I believe, next Tuesday, but really setting up quite nicely. The company reported their prior earnings back here. Digital online sales were improved by 300%, and they've since improved that. So keep your eye on this, because if we see this a nice gap up and a MACD black line up through the red, we could see a continued uptrend. Another company due to report next week, but is also really, really picked up with their digital sales. This is Big Lots, BIG, discount retailer. The other difference here too is both Ollie and Big Lots, they provide bedding, bath products, mattresses, food, other products that Ross and TGX do not. So that is another primary difference in these discounters. But I would argue that the digital sales component is really quite important. Another stock, another area that we can look at that did report earnings this week is NVIDIA. And I know you've probably heard me talk about this in prior shows. This has been a big winner for our MEM Edge report. The company came out with great numbers, and it was the first quarter where their semiconductor chip sales that supply to data centers overrode their strong gaming chip area. So NVIDIA really just charging to new highs. This, I would argue, is, if not I would argue, the leader within semiconductor. Here's another semiconductor that reported earnings this week, and this is Cree. And again, we can see quite a bit of a different look. These guys fell down, fell out of favor. They do not provide to the vibrant gaming or the data center area. They're all about LED chips for lightings, for computers and so forth, fell out of bed. The other big component with NVIDIA, they guided higher for Q3. You want to be on the lookout for that, because that implies to you the company is strong enough that management is upping their guidance, superior upside growth. Home Depot also reported their strongest quarter ever in history. Again, all about the lockdown, individuals wanting to improve their home environment. This is a monthly view going back to 98. Always interesting in these big companies when they report record earnings, you want to sit up. So this again is an add-on play to that home building as well as home improvement. And then another stock that did report this week is Lazy Boy. And I'm sorry, yes, they did report. And again, you're stuck at home. You want to have one of those Lazy Boy chairs so that you're comfortable. A few minutes left here. I want to take a look at some companies that are due to report. First up is Toll Brothers. Keep your eye on this because we've seen superior numbers in these builders. ADSK, one of these software names, and this one actually fell out of bed, but it does look poised to break out. They provide software to the construction space, so keep your eye on that one. Bed Bath & Beyond is due to, Best Buy. They are due to report. These guys have really been on a tear. It's all about appliances, computers, all of that stay-at-home consumer goods that are in high demand. And then WSM is Williams-Sonoma due to report. This company is coming out of this nice flat base. They have excelled at the digital sales, and they've also gotten creative, stay-at-home kitchen products and so forth. And I talked about Ollie due next week as well. And also one other stock that I did want to go ahead and share with you, not necessarily earnings related, but it is news related, and that is Zoom Video. ZM is the ticker symbol. The stock had an exceptional week, breaking out of this 2-month base, big volume, and the news was that they are expanding into 20 additional international countries with their work. So you do want to pay attention to headline news and analyst upgrades as well that will help your stocks propel quite a bit higher. I am going to leave it at that. For those of you who have not taken a look at my MEM Edge report, go ahead and take a trial. You'll have really be provided with insights into other outperforming sectors due to continue to outperform, as well as stock selection that you will not want to miss. Have a great weekend, everyone, and I will see you next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.